Stocks trade soft but mostly ranged in absence of cues ahead of the year, and more stocks see red than green. Mid-caps underperform.
In his address to employees, Reliance Industries chairman Mukesh Ambani lays out his expectations from each of the conglomerate's businesses. He wants Jio to now provide unique solutions to the world, Reliance Retail to deliver significant benefits to all stakeholders, integration of media and entertainment with digital to reinvent the industry, and the new energy business to transform the world.
Dr. Reddy says all claims against it pertaining to the Revlimid generic have been withdrawn. The company, along with innovators Celgene and BMS, have been accused of restraining competition.
Shriram Finance slides after new shares list post-merger. Spandana Spurti gains on a bad asset sale deal with an ARC and Ashoka Buildcon perks up on order wins.
SBI chairman tells CNBC-TV18 that credit growth will unlikely be impacted by rising rates given the strong demand and likely peaking of inflation as well. He sees the comeback of contract services as a big driver. Hello and welcome. You're watching us here on Halftime Report on CNBC-TV18. I'm Manglam Malu, with me Sonal Butra. Well, not looking particularly bad for the market after what was a rough first half of trade. The Nifty has managed to hold on to that 18,000 mark. The only problem lies in the broader markets. We have the mid-cap index, which is underperforming, but at the same time, we haven't seen any significant worsening from what we had seen in the open at the open itself. So the only solace that we have right now for the bulls is the fact that we haven't broken 18,000. We haven't seen much worsening. And now as we speak, the IT pack is picking up. So Infosys has moved to the high point. HCL Tech is doing well as well. So with its weight on the index, if the IT stocks continue to do well, then maybe there could be some case of an up move in the second half.
Oh yes, that's something we'll track as well, right? It's the important monthly options expiry as well. So the last 1 hour of trading action will be really important to track. Couple of stocks in focus as well, but across the indices, if you talk about sectoral moves, that is, all of them are in the red right now. So let's get stock specific now. We have Rajratan Global Wire, which is in focus, received an approval under production link scheme, PLI, that is from Government of India to manufacture specialty steel. We have with us Mr. Sunil Chordia, who is the chairman and managing director at the company, joining us now to detail this and the outlook for 2023 as well. Mr. Chordia, good afternoon. Thank you so much for joining us, and season's greetings to you and everyone at the company as well. Well, about this PLI that you have received, I wanted to understand, is this for fresh capacity or an existing one, or is it for the planned capex in Chennai? What are the benefits that you will receive here?
Ma'am, this is for our new project in Chennai. God has we have entered into an agreement to get the PLI benefit, which will be 8% of the gross revenue of the incremental capacity and incremental gross revenue.
Right. Mr. Chodia, you already had announced a capex plan in Chennai. Phase 1 was likely to come on stream by the end of this financial year. Is this for phase 2, or is this over and above the capacity that you've announced already?
No, this is only for our Chennai, which is already announced. There is no new capacity plan. We are planning a 60,000 tons capacity in Chennai, and we got this approval for Chennai facility only.
So when you're saying that the incentive will be 8% of gross revenue, that's the number, right?
Yes, incremental gross revenue.
So what is that incremental gross revenue that is required here, sir?
So whatever increase in the revenue every year, we will get 8% reimbursement from the government of India.
And how much that would mean in terms of overall benefits to you?
So roughly our calculation is that if we reach 60,000 tons, which will be a revenue of 600 crores, so 8% of 600 crores will be spread over in 5 years. Okay, so roughly you get
almost 8 to 10 crores per year in terms of incremental benefits.
Yes.
Perfect. Let's talk about the here and now then. FY23, I mean, the last time you joined us, you said that things were looking weak in the export markets. You had also lowered your, volume guidance for the year to about 7 to 8%, and that's on account of flat volumes that you expected in Thailand. How have things been ever since, and do you think you will lower that guidance further?
There is not much improvement in Thailand because Thai tire companies are export based. They export their products to Europe and America. unfortunately, their exports are very low. So our Thai capacity is underutilized right now. And we don't see much growth in Thailand business this financial year. It is because of geopolitical situation. And I can't say when things will start improving in Thailand. So this year, we will not grow business in Thailand. Yeah.
Okay, so what is the current capacity utilization at Thailand? Just bookkeeping figures that we are asking for here.
We have started new line. We have started trials in 60,000 tons capacity, but it's still not completed the trials, and that is not put onto regular production. So considering old capacity, we are running at 80-85% capacity.
Okay, 80-85% in Thailand. But you did mention earlier in your investor presentation that you are in talks with new customers at Korea and Vietnam as well. Any progress here? Whatever you were planning to export to Europe, do you think you will be able to shift it to these two new geographies?
Yeah, we are making very serious efforts in developing new customers for Thailand as well as our Chennai facility. We have started a company in Europe. We have appointed a manager in Europe to get new approvals from tire companies. The response is encouraging, but it takes time. This is a difficult product, and approval from customer takes some time before I can commit the volumes and business with them.
Right. And what about India? You said that, the next couple of quarters do look strong for India, but incrementally we've heard of demand not growing as fast as expected in India as well, from across the board. So do you think that the India volume growth target that you had of 10% this year may have to be scaled down?
I think we'll grow 10% volume in India by in this current year. We had done 55,000 tons last year. So we have revised our targets for from 65 to 60,000 tons, and I think we'll do that.
Okay. So that is about one part of your business. I was reading a report which is by Nuvama, which believes that Raj Ratan may clock revenues of around 1,800 crore rupees in next 3 to 4 years. Is that something that is the target as well, and you will be able to achieve it? And while you're doubling the revenues in next 3 to 4 years, what kind of margin profile will you see?
No, it is based on our projections and capacity investment we are doing. We have 60,000 tons capacity here in Pithampur. We will have 60,000 tons capacity in Thailand, and our Chennai project will have 60,000 tons. So when all the three capacities are utilized, the 1,800 crores will be the top line. And you can easily assume a EBITDA margin of 18% average.
All right, 18% EBITDA margin with 1,800 crore of revenue once your entire capex is completed in the next 3 to 4 odd years. But apart from that, are you looking at any other categories to enter as well? I mean, there were conversations around you looking at newer steel cords, etc., in terms of revenue opportunities?
And right now, we are totally focused on this, and we first want to make this successful.
Okay, and on Europe, you had set up a new marketing office in Europe. You recently got the approval from Michelin as well, and you said that once you get it, you will use it as a leverage to get some more European clients.
So we are approved with Michelin in India. That gives us, that opens our door for negotiation and discussion with their European plant. But the response from customers is very slow, and it takes long time. Bead wire is a critical product, and getting new customer approval takes some time. So I will not jump onto it, but my long-term projection of 20% CAGR growth for 5 years still remains same.
So how much is Europe as a percentage of total revenues, Mr. Jordia?
Sorry?
How much does Europe contribute to your revenues?
How much
does Europe contribute to your revenues right now?
No, last year we did export something, maybe around 5-7% of total to Europe. But we are looking at bigger export from our Chennai facility and Thailand facility. Because the freight cost to Europe has come down drastically. There are significant changes in the market on the cost, on the price, on the freight cost. So I see a very strong possibility of exporting to Europe.
So once Chennai comes on board, your market share, global market share, which you had alluded to being about 10%, goes on to 18%, right?
Yeah, 18% in 3 years' time.
And domestic market share is upwards of 50% or between 45 and 50?
It's a little lower than 50%, upward of 45%.
Last question before we let you go, Mr. Chodia. You know, when we are talking about weakness in the European markets, it has also made some valuations attractive in terms of industry-wide performance as well. Is there something that you would be interested in at all, since you're talking about increasing your export market share? So instead of transferring your capacity to Europe or exporting it, you can actually do it via an acquisition in Europe. Is that a possibility at all?
Making Europe will be very difficult. We are working on the principle that we'll continue to make in a low-cost country and export to a high-cost country.
Okay.
So acquiring a facility in Europe, we have to be very, very cautious. And of course, we have looked at some possibilities, but I don't see it happening.
And acquiring a facility in India, maybe you are a 50% player in India, maybe some smaller players, etc.
There is nothing available and there is no possibility.
All right.
We'll focus on our greenfield expansion.
Okay, good luck with that, Mr. Chodia. It was a pleasure speaking with you. Thank you so much for joining us and detailing all the plans going forward as well. All right, that's the word coming in from Raj Ratan Global Wire. The long-term plan of 20% growth continues for the company as well. We'll do one thing. We will slip into a short break now. Up next, we'll get you more on markets and stock-specific action. Welcome back. Still tuned into Halftime Report on CNBC-TV18. Well, the broader markets, they continue to sell, but a couple of stocks which are at the highs of the day. So we have Arvind Smart Spaces. We spoke to the management earlier today, and they sounded quite bullish. The stock has actually spiked up right now, up 2.5%. They did talk about how Ahmedabad market is seeing a strong growth. They do have 22 million square feet of launches planned ahead and 3,000 crore rupees worth of unsold inventory as well. And they are looking at selling around 1,000 units in this financial year itself. So looking strong, and after that commentary, the stock is seeing gains right now. With that, we'll move on and focus on some stocks in news. Dr. Reddy says all claims against it pertaining to Revlimid generic have been withdrawn. Sonia Shenoy is joining us to give us more details on this one. Sonia?
Well, thanks a lot for that. It's a positive development coming in for Dr. Reddy's. As you rightly pointed out, they have mentioned that all the claims with regards to Revlimid generic complaint has now been dismissed. Revlimid generic had been named a defendant along with Celgene, BMS and several other generic companies. And now the company says that the Revlimid generic complaint defendants has been improperly restraining competition, and they've maintained a shared monopoly in the sale and the brand. Now, the plaintiffs have voluntarily dismissed the company from the case, and hence that provides a bit of a relief for Dr. Reddy's. Hence, the stock is trading a bit higher. Back to you.
All right, Sonia, thanks a lot for that. So that's about Dr. Reddy's. The other stock which is on our radar is Shriram Finance, trading sharply lower after the company has issued 17 crore new securities. Vivek here joins in with details on that. Vivek, incremental supply hitting the bourses.
Absolutely right. That's the main worry. The incremental supply, 17 crore new securities, hitting the demat accounts yesterday, and that is now available for sale, especially if you've bought it for that particular event itself. So, as you mentioned, the new shares are available for transactions from today, and the shares were actually issued post the entire Shriram Group scheme of amalgamation. So, the Shriram City Union, Shriram Transport, and a couple of other smaller entities participated in this scheme of amalgamation. Now, apart from this, what you have to keep an eye out for is that two of the largest shareholders of Shriram Finance now, both Piramal Enterprises as well as TPG India. Remember, Piramal Enterprises owns close to 8.34% stake in the company. TPG India owns around 2.65% stake in the company. In the past, they have indicated that they would be looking to cash out from their particular stake in the company, and now analysts believe this could act as an overhang as far as the share price of Shriram Finance is concerned. And the back of that today, very high cash volumes, very high volumes even in the future segment. This particular stock is taking quite a bit of a beating.
Okay, all right. Vivek, thank you so much for explaining what's happening with Shriram Finance, a big loser in trade today. But what's doing well today, Spandana Spurti is buzzing in trade up close to 5%. Abhishek is here to give us the details on what is aiding the rally in an otherwise weak market. Abhishek.
Well, MFI continue to sell their stressed loans to ARC, we have seen in the recent past. So Spandana Spurti has also sold some of its stressed assets to an ARC worth about 323 crores. So for this, they have received about rupees 95 crore on an upfront basis. This is being done under Swiss challenge method, and if you take a look, this is one of the best rates that they have got amongst peers as well, who have recently sold their stress portfolio to ARCs. So Jana Small Finance Bank had sold their stress to ARC. They received about 2.5% in August 2022. Recently, we had Bandhan's news of selling stressed pool to ARC. They received about 9% of the loans, and Spandana Spurti on the other hand has received about 29.5% in terms of the pools that they have sold down. So one of the good rates that they have got, and that is why the stock is seeing a massive gain in trade today. Back to you.
Abhishek, thanks a lot for that. 4% higher on that counter. But a Nirmal Bang report, recent one, indicates that chemical sector's M&A transaction between January to September, the first half of the previous calendar year, first 9 months, so to say, have declined to under $3 trillion. Sonal joins in with more on this. Sonal, what exactly does it mean?
Well, it is an interesting report, so I just thought let's talk about it in terms of numbers and what it means for the future transactions that some of the players are planning to undertake. So as per the data, M&A transaction value has declined to under $3 trillion versus $3.7 trillion. This is on a YOY basis. Out of this, healthcare and pharma had an 11.4% share, which is around $350 billion in terms of value, and oil and gas at 8.9% share, which is around $273.3 billion in terms of value. Now, there have been large deals. Large deals mean something above $5 billion. They were around 58 or at least 10% of the global M&A deals that we saw in this particular sector as well. The recent one, of course, is that we've been talking about Advent taking over Suven Pharma, which implied a business valuation of FY23 EV to sales of 9.5 times. Now, what does that mean for any other company which is looking at an acquisition? PI Industries is case in point. They have been telling us that they are looking at a pharma player. They are looking at an acquisition. So if we take this particular valuation as the parameter, this will pose a challenge for PI Industries because they may have to pay around 9,500 crores to 19,000 crore rupees for a 100% buyout of a similar asset. That is this one that is the kind of Suven Pharma. And this will mean that they will have to leverage their balance sheet as well. In fact, they have interestingly put out names of companies which are looking at an acquisition. There is UPL, PI Industries, Sumitomo, Coromandel International. All of them are looking for an M&A. Barring UPL, the rest of them are net cash as on FY22. Now, UPL is looking for smaller deals, say under 200 crore rupees each for both seeds and crop protection services segment. They put out an interesting table as well, where UPL is looking at seeds and services as their possible M&A interest. They have a net debt of 18,900 crore rupees. PI Industries, which is net cash right now, is looking at CDMO and API. This is something that they have told us. Sumitomo is also net cash of around 435 crore rupees. They are looking at crop protection businesses or services. And Coromandel also, which is net cash to the tune of 3,300 crore rupees, is also looking at crop protection business for acquisition. So interesting times, and this particular valuation that has been set in December could be the benchmark, and that is something that they're highlighting here. All
right, interesting indeed from the chemical sector. But the stock on our radar right now is Bharti Airtel. Look at that go, almost 6.5% off the lows from this morning. In fact, the stock had hit a low of 760 odd rupees and currently has surged to the high point of trade. There you have it, almost a 2/3% in terms of gains, but off lows a 6.5% rally. That's because we understand that sources suggest that the company is actually looking to list Airtel Payments Bank. Reema joins in with more details on that one. Reema.
Thanks so much for that. Yes, that's what we've picked up, that Bharti Airtel is looking to list Airtel Payments Bank. Now, this is a payment provider similar to Paytm or FinTech. So some of the services provided by Airtel Payments Bank in India will include savings and current account, payments, insurance, doorstep banking. Airtel has roughly a 70% stake in, this is the listed entity. Airtel will have a 70% stake in Airtel Payments Bank. And one of the big benefits that it provides is it helps lower the churn for Bharti subscribers. Now, where Airtel Bank scores over its competitors, it has an edge. One, it's the only profitable fintech player in the industry so far. That's what the company has to tell us. And two, it has access to Bharti Airtel's unique subscribers and users across its various digital assets. Now, as I said, Airtel's payment bank is the only profitable fintech company. So let's talk about their financials. Their annual revenue run rate is now close to 1,200 crore rupees. EBITDA was 4.7% in the quarter gone by, and at the bottom line, they had a profit of 2.1 crore for Bharti Airtel. They're talking about the proportionate stake that Bharti Airtel gets. The company has more than 50 million monthly transacting users. These monthly transacting users are those who have made at least one successful transaction in the calendar month. As I said, this is a company, Airtel Payments Bank, which is similar to a Paytm as well as Fino Payments. There are 6 of these payments banks currently that we have in India. Paytm is the largest. So quick comparison between Airtel Payments Bank as well as Paytm. Now, Paytm is nearly 6 times the size of Airtel's payment banks when it comes to the gross merchandise value. For Airtel's bank, it's 50,000 crore, but for Paytm, it's 3.2 lakh crore. Again, these are numbers that we've looked at as of the September end. Revenues for Paytm on a quarterly basis is 2,000 crore. For Airtel Payments Bank, it's about 308 crore. But the big difference is, look at the loss that Paytm has made. While it's much bigger in size, as I said, revenues is 6.5 times that of Airtel Payments Bank. Look at the loss. The loss that Paytm reported was about 570 crore. And in comparison, Airtel Payments Bank is now profitable. It's been seeing a double-digit growth. And now the company has plans to monetize its holding in some way and list Airtel Payments Bank. Back to you.
Okay, interesting data there and the comparison as well. Reema, thank you so much for joining us and telling us all those details. So Bharti Airtel remains in focus. But apart from that, 2022 has been a stellar year for Indian banks with solid loan growth and an improvement in asset quality across names. To understand what 2023 could look like for the sector as a whole and for the biggest domestic lender, we spoke to Dinesh Kumar Khara, who's the chairman at State Bank of India. Let's listen into what he had to say.
So what we have witnessed in the current year in terms of the improvement in the quality of the bank books, I expect that the same trend should be continued in the coming year too. The reasons are very clear because the kind of growth which we have seen is essentially riding on the growth of the economy which we have registered. When the rest of the globe is looking quite dull, perhaps India is a shining star. I think my expectation is last quarter, of course, we saw a very healthy loan growth, which is to the extent of over 20-21%. But going forward, it will probably taper down a bit. But I still expect that 15 to 17% is something which should be a reality. When it comes to chunky recoveries, perhaps may not be there because all those low-hanging fruits have already been plucked. But at the same time, there's a definite improvement in the ecosystem as far as the recoveries are concerned. But still, because of these enabling environment, it would be possible to affect recoveries there also. So I would say that in terms of quantum, it may not be as high, but still we would see some kind of recoveries coming in with the help of OTS, etc. And I think that will it will be some kind of pace of improvement may not be as high as we saw last year, but still I would say that there would be some incremental improvement as far as the asset quality is concerned.
All right, so that's about the State Bank of India. This year definitely has been the year of PSU banks. Meanwhile, just keeping an eye on a couple of stocks from the broader markets. We are seeing a big move on the Jindal Stainless and Jindal Stainless Hisar stocks. So Jindal Stainless Hisar is actually up around 8%. Jindal Stainless itself is up around 9%. So we're seeing a big move there. Godavari Power and Ispat is the other one, which is up around 2.5% right now. But recovery from the lows is what we've seen on that counter as well. So we have a few stray stocks actually buzzing around in an otherwise bleak-looking market. Take a short break, come back. We speak about the market technicals. Manish Hathiramani joins in. Well, it's been a soft day of trade so far. Triple-digit losses seen across all the frontline indices, just holding above that 18,000 mark for the Nifty. So important to watch out for how the second half pans out, especially because it is expiry and it is that time of the day where we do take note of the FNO action. Interesting things taking place. Yesterday, we did see a fair amount of writing at the 18,100 put. Now today, with the opening gap down itself, those put writers have run for covers. So we have around 25 lakh shares, which have seen an unwinding, and we still have an open interest of around 50 lakh shares on the 18,100 put. While that has happened, the bears have actually taken note of this development and gone ahead and used this as an opportunity to write calls at 18,100. So as we speak, a crore shares written at 18,100, indicating that maybe levels upwards would face stiff resistance. Not only 18,100, the bears have actually tightened their nose. 18,050 call also comes up for you. Almost a crore shares written on that one as well, with a premium of almost 15, 16 odd rupees, telling you that levels upwards of 18,050, closer to 1860, would face more resistance. But the bulls, they still haven't given up their fight on 18,000. The 18,000 put has added about a crore shares in open interest for a premium of 22 odd rupees, telling you that levels below that 18,000 would see some support around that 17,980 to 17,990 odd. But it is options expiry and the monthly expiry as well. So those who write straddles are the ones who make the most amount of money, provided the market remains in that range. So 18,000 put has a premium of close to around 22 rupees, 18,000 call has a premium of 50 rupees. So the combined premium is 70. Expected expiry range basis these writers is anywhere between 17,930 to around 18,070. Short point, levels upwards of 18,050 may see some bit of resistance. Manish Hathi-Ramani of Deen Dayal Investments now joins in. Manish, I remember a couple of weeks ago you were bearish on the index. We did see a big decline on Friday as well. We touched levels sub 17,800. Thereafter, there was a bit of recovery. Has that changed your view in any way?
Good afternoon, Mangalam. Sadly, no. In my opinion, 18,150 to 18,200 is really the level to watch out for. We need to really close above 18,200 to even commence our thought process on the upside. Until then, any up move is really being looked at as a sell opportunity. Given the current scenario, since it's expiry now, 17,950 is really the trigger point to start fresh short positions, which could then take the markets down to 17,550, and if it bleeds further to 17,200.
Okay, and Manish, what would your individual technical picks be in this case?
Hi Sonal, I'm working with two sell calls. My first one is on ICICI Bank for a target of 875, stop loss of 905. Banking as a sector is looking weak, and this heavyweight seems to be leading the pack. 885 was a good support which broke last week. Until we do not get past 905, the bias will be on the sell side. The second sell is on Tata Motors, which is for a target of 370, stop loss of 400. 390 was the intermediate low which broke last week, which thereby makes it a good selling candidate for lower targets.
All right. Okay, Manish, thank you so much for joining us, and season's greetings to you. With that, we'll do one thing. We'll slip into a short break. On the other side, Sapna will join us to tell us how Indian economy faced multiple challenges in 2022 and how it fared up. Stay tuned. Welcome back. Still tuned into Halftime Report here on CNBC-TV18. Markets still continue to be under pressure, but let's talk about economy now. The Indian economy saw multiple challenges in 2022, ranging from a spike in energy prices from the Russia-Ukraine war to dealing with the fallout of the Fed's rate hike trajectory. Sapna is here to take us through the decisions taken by the government to deal with these challenges and also tell us what lies ahead in 2023. Sapna.
The initial impact from Russia's invasion of Ukraine saw Brent crude prices shooting to $130 per barrel, global food supply being disrupted, and inflation soaring. This posed multi-pronged challenges to the Indian economy. With April inflation shocking at 7.79%, the government swung into action. Adding to the freeze on pass-through of crude oil prices to petrol diesel, it restricted wheat exports in May and followed it up with a slew of other measures, including slashing excise on petrol and diesel, and doubling the fertilizer subsidy. But as crude prices continued to rise, more was needed. India shrugged off intense global pressure and leaned heavily towards Russia for cheaper crude. So much so that Russia is now the top supplier of crude oil to India, upstaging traditional suppliers like Iraq and Saudi. But the government also cashed in on an opportunity these surging prices threw up. It introduced a windfall tax on oil cos and mandated them to ensure that domestic sales of petrol, diesel and ATF were at least 50% of their exports. Multiple reviews later, the tax remains, even though Indian basket of crude oil has slipped to below $78 per barrel. This is very close to the two-week average of $75 per barrel, below which threshold the windfall tax should become nil. Indications are the government hopes to garner close to 40,000 crores from this windfall tax by March end. But if the drop in crude oil prices sustain, that number may not hold. In the meanwhile, spike in global inflation prompted the American central bank to hike rates aggressively, and this pushed the rupee to record weak levels, from breaching 79 to a dollar on the 5th of July to 83.20 to a dollar on 20th October. RBI's measures to shore up the currency, which included more diversified sources of forex funding and internationalization of the rupee, have had a limited impact so far. The trade deficit continues to widen, crossing $198 billion in the April to November period. Meanwhile, between April and September, India's forex reserves dropped by $75 billion to $432 billion. Since then, RBI has managed to claw back reserves to around $564 billion, providing 9 months of import cover. It was also managed to make some headway on inflation. November CPI has fallen to 5.8%, which is within RBI's tolerance band. However, the rate hikes are taking a toll on the GDP. RBI has now revised the FY23 GDP forecast down from the 8 to 8.5% in the economic survey to 6.8% currently. That notwithstanding, India's economy expanded by 9.7% in the first half, thus continuing to be among the fastest growing in the world. The government has also stuck to fiscal consolidation and not resorted to additional market borrowings, which is a big plus. So, as we move into 2023, the challenges are plain. There's uncertainty over COVID infections, given what's happening in China and elsewhere. There's pressure to maintain growth with fiscal consolidation, even as large parts of the world stare at an impending recession, and of course, keeping inflation within comfort levels while revisiting fuel prices and maintaining a stable currency.
Swapna, thank you so much for that. 2023 is what we'll be looking at for all the macros, etc. Take a short break, come back. On the other side, we'll get you Reliance Industries Chairman Mukesh Ambani's address to employees as he lays out his expectations from each of the conglomerate's businesses on the other side. A couple of mid-cap sitting highs of the day. We have Escorts Kubota, which has moved to the high point. Of course, the gains are far few, and the quantum is much lesser as well. But it's such a weak market in the broader market, especially in the F&O space, that any sort of gains, the bulls are clawing onto that. AB Fashion and Retail is the other one, which is up about 1% and is at the high point of trade. But let's talk about Reliance, because in his address to employees, Reliance Industries Chairman Mukesh Ambani has laid out his expectations from each of the conglomerate's businesses going forward. He wants Jio to now provide unique solutions to the world, Reliance Retail to deliver significant benefits to all stakeholders, and integration of media and entertainment with digital to reinvent the industry as a whole. The new energy business, he expects that business to transform the world. Let's hear that excerpt.
The end of 2022 is when Reliance will have crossed the halfway mark of its golden decade. In 5 years from now, Reliance will complete its 50 years. All of us are proud of what we have achieved so far, but the journey ahead is going to be far more exciting, more rewarding, but also more challenging. Let me spell out my expectations from the leaders and employees in all our businesses and initiatives. First, under Akash's chairmanship, Jio is rolling out the world's best 5G network across India at a pace which is faster than anywhere in the world. Jio's 5G deployment will be complete in 2023. I heartily congratulate the entire Jio team for further consolidating the #1 position in the digital connectivity business. But Jio platforms should now get ready for India's next big opportunity to provide unique digital products and solutions to both domestic and international markets. Since every single village will have 5G connectivity, India has a historic opportunity to completely erase the rural-urban divide which has plagued our country for so long. We can now ensure that no Indian will be deprived of access to high-quality education, high-quality healthcare, and high-productivity economic activities. This is how Jio can accelerate India's inclusive development. Second, under Isha, our retail business has grown rapidly. It has emerged as one with the widest and deepest reach in India across all product baskets. Most significantly, Reliance Retail has created over 2 lakh new jobs last year, becoming one of India's leading employers. I congratulate the retail team for setting new standards in disciplined execution, which is the key to its success. But I know that all of you in the retail team are capable of chasing even more ambitious targets and goals. Like Jio, the growth of our retail business will also have a cascading effect on India's inclusive development. Our young people will have more jobs, our farmers will have higher incomes, our SMEs and large manufacturers will become more productive, and our trader partners will become more prosperous. Third, we continue to build on our leadership in the O2C business with new capacities and capability. In the upstream exploration and production segment, our team continues to work harder for providing energy security for India. All of us are excited about the media and entertainment business and its integration with digital services that will reinvent the entertainment industry completely. My congratulations to all of you in these enterprises. Keep doing your good work, and I am sure you will scale higher summits of success. We are particularly proud of our JWC team that hosted the G20 in Mumbai, and of course, our life sciences team that is going on and charting new paths of innovation. Fourth, New Energy is Reliance's newest startup business with the potential to transform not just the company or the country, but the entire world. It shows that we care for the planet, we care for all the people on the planet. With Anant joining this upcoming next generation business, we are making rapid progress in getting our gigafactories in Jamnagar ready. From being India's largest and most valuable corporate, Reliance is now well on its way to also become India's greenest corporate. The goals before our new energy team are crystal clear. Enable India to achieve security and self-sufficiency in energy by reducing dependence on imports. And remember, you can do so only by remaining agile and ahead of the technology curve. Fifth, 2023 will also be a year of renewal and revitalization for Reliance Foundation. Under Neeta's inspiring leadership, Reliance Foundation is working on even more ambitious new initiatives in education, healthcare, sports, women's empowerment, and ecological and environmental conservation.
All right, so that was Chairman Mukesh Ambani laying out the vision for Reliance for the future. Under his leadership over the last 20 years, the company has actually grown at double-digit CAGR for 20 years itself. Take a short break, come back. On the other side, we get chatting all things commodities. Manisha Gupta joined by Surendra Mehta, who's the secretary at India Bullion and Jewelers Association.
Welcome back and take a look at the gold prices now, where we are looking at steady moves coming in. $1,800 per ounce is holding, and that does look smart on the charts. And where are we headed for 2023 then, and should you be including gold in your portfolio? Let's get in. Surendra Mehta, he's Director IBJA, to answer some of those questions. Mr. Mehta, hi, good to have you. How are you looking at the gold performance in the year gone by? I mean, clearly for the Indian markets, rupee has been one of the greater inputs there to see where the rupee is ending in this year. How do you look at the currency? How do you look at the physical buying at these moments with these prices?
Manisha, absolutely. What I hear this was for the gold industry. The gold prices in the last 52 weeks were moving between $1,615 to almost $2,070. The INR versus dollar, that was almost from 74 rupees to 83 rupees now. And dollar index from 95 to about 115, 114 to 0.75 to be precise. So this was, I think 2022 was the year for gold. And that is how we saw a big rally in gold coming in and big downfall also in the gold coming in. in the international market. But as far as India is concerned, because India is concerned, the gold prices went up almost to 55,000. Precisely because the rupee in our country has weakened too much. Almost if there is a depreciation in 1 rupee, the gold prices per kg will rise by almost 60,000 rupees. So almost 6 lakhs rupees per kg gold has increased only because of the depreciation in the rupee by 9 rupees. So this was how the gold market performed. From 1615 now to the lowest level. Now we are at almost at 1800 level, and I think we will see a tremendous year for the gold industry for 2023.
So, the street seems quite divided when you look at the forecast or the outlook for 2023. There are expectations that we could be looking at prices below 1600 also. 1575 till time is what the most bearish outlook that I've seen. But on the higher side, you have some of those obnoxious numbers like 3,000 and 4,000 as well. But $2,000 per ounce to 2,200 is a level which most banks and brokerages believe is achievable. What is your sense?
Absolutely, Manisha. In your many earlier shows, I have stated that my expectation in 2023 would be between $2,050 to $2,150. So I'm looking at Indian price of nearly 63,000 rupees. And I will tell you the reason behind this. The first reason is the dollar index has been continuously falling. In spite that dollar index is going down, it is almost near 104 now. The gold prices, though gold prices are increasing, the rupee is continuously weakening in our country, and that is a big reason for worry for all of us. Secondly, everybody now, even the topmost equity market analysts have been saying that we are entering into a recession. If the central bank have started buying the gold in some of the countries, we have already witnessed this, and probably this report will come out somewhere in the last week of January. Many central banks have started buying. ETF, I personally feel, will start buying gold probably from 15th of January or the first week of February. So this is the main reason that other gold is set to perform amongst all the other asset class. Because I personally feel that recession will be the key factor for increasing the gold prices.
And then it's never a straight line really, because this year as well we've seen a $400 of a range almost. So when it comes to buying, a lot of people would love buying gold especially when they hear those mouth-watering forecast of 60,000 plus kind of levels in case of gold. But at 55,000, there perhaps may not be so many takers. So what is the kind of dips that the markets can look forward to?
See, I personally feel that 2023 should see a range between $17 to $2,150. So in Indian price, we should be looking at, if the dollar remains at 83, INR to dollar is at 83, we should be looking at something between 51,000 to 63,000.
That's about gold. And what's your sense about silver? Because we've seen some outperformance coming from silver in the recent few sessions there, $24 per ounce or thereabout holding. What is the range that you're working with that one?
See, as far as silver is concerned, there is a big support level at $22.80. If it does not breach $22.80, then I think we are heading for a very big move in the silver. In my opinion, if silver crosses $24.9, then the next target would be $27, and thereafter the next target would be $32. So the major support comes at $22.8 at the spot price. So in my opinion, if you consider all this in Indian currency, I would say we should look at silver in the range of 63,000 rupees to almost 95,000 rupees in 2000.
Okay, then.
Okay, so incremental money, you would say put in gold or silver?
Well, I would always prefer to put money in gold, because silver, I think you better trust the yellow metal than the white.
Yellow for the win. All right. Thanks a lot, Mr. Mehta. Manisha, thank you for joining in. and giving us the outlook for 2023 for gold and silver. With that, we are out of time on this edition of Halftime Report. You stay tuned.